Welcome into Yahoo Finance Live. We've got some breaking news here. The latest data on inflation coming through right now. I'm bringing in some of these numbers here that we're seeing. We're looking at CPI on a month-over-month basis coming in up 0.4%. That was a cooling here from the prior reading that we got, but still coming in a little hotter than what the street expected. That core month-over-month print coming in at 0.3% growth, in line with what the street was looking for. Now, on a year-over-year basis, we're looking at CPI at 3.7%, so a bit higher there. Core CPI at 4.1%, so a bit of improvement from what we saw the prior month here, Brad. But of course, the big question for the street right now is what this means for the Fed, whether or not it's enough to justify staying on the sideline. Taking a look at the reaction in futures right now, we're still looking like we're going to be looking at gains here at the open, with Dow futures still up just over 100 points.
Yeah, some of the color around this report. The index for shelter still the largest contributor to the monthly all items increase. Stop me if I sound like a broken record, but that is something that we've continued to track month over month here. But here's where it also gets interesting. Even though that accounted for over half of the increase here, an increase in gasoline index, also a major contributor to the all items monthly rise. Major energy component indexes were mixed in September, though. The energy index, that rose 1.5% over the month. Food index, that increased 0.2% in September, as it did the prior 2 months as well, the report noting here. And then additionally, you think about what this all means for food as well. The index for food at home, that increased 0.1% over the month, while the index for food away from home, people continuing to eat out a little bit more, that's up by about 0.4% in this report.
Yeah, certainly. And judging by the market's reaction is going to be critical here to see as the street begins to digest these numbers. But still, when you take into account the fact that that headline number there coming in a bit hotter than expected, a 3.7% year over year rise, more than what the street was bracing itself for, 3.6%. You got to question whether or not that might be enough for the Fed to act again before the end of the year. And you could see we're racing some of those gains right now with the Dow futures up just about 85. But certainly some of these numbers here a bit worrisome for the Fed, also for forecasters out there, market watchers, just in terms of what this could mean for the future of Fed policy.